how will the new tax bill affect families in 2024? This is a question on many minds as we delve into the new bipartisan proposal that has been announced. This proposal is not just a simple tax bill, it's a game changer. It primarily aims at expanding the child tax credit, a relief to many families, and extending business tax deductions, a boon to many businesses. This tax bill is all set to revolutionize the way we perceive taxes and their implications. So, are you ready? Let's unravel the specifics of this bill and see how it may impact your family. The child tax credit is a significant component of this bill. Now, let's delve a bit deeper into this. The proposal outlines a phased increase to the refundable portion of the child tax credit for the years 2023, 2024, and 2025. This means that the amount of the credit that could be refunded to the taxpayer is set to increase over these 3 years. But what does this really mean? Essentially, it means more money back in the pockets of families, particularly those with children. Moving on, an interesting feature of the bill is that it adjusts the child tax credit for inflation starting in 2024. This is important because as the cost of living increases, so does the financial burden on families. By adjusting the tax credit for inflation, the bill ensures that the value of the tax credit doesn't diminish over time, thereby continuing to provide substantial support to families. But here's a key point to note. This credit isn't just for those who pay income taxes. Low-income families who don't pay income taxes could receive up to $1,800 refunded of the $2,000 per child credit. This is a crucial provision, as it ensures that the benefits of the child tax credit are extended to those who need it the most. This proposal is expected to benefit 15 million kids from low-income families and could lift 400,000 children out of poverty. The potential impact of this cannot be overstated. It represents a significant and tangible step towards reducing child poverty and providing better opportunities for children across the country. Now, let's shift our focus to the business side of things. The recent bipartisan proposal has introduced some significant benefits for businesses as well. One of the key provisions is the ability for businesses to immediately deduct the cost of U.S.-based research and development, or R&D investments. This is a significant move that encourages innovation and development within our own borders. By allowing businesses to deduct these costs immediately, the bill provides a substantial incentive for companies to invest more heavily in R&D. This, in turn, can lead to advancements in technology, medicine, and a myriad of other sectors. But that's not all. The bill also restores full deductions for capital expenses. Capital expenses, or CapEx, are funds used by a company to acquire, upgrade, and maintain physical assets, such as property, buildings, or equipment. This can be a significant expense for businesses, particularly those in the manufacturing or technology sectors. By restoring full deductions for these expenses, the bill makes it easier for businesses to invest in their own growth and expansion. These changes are not just beneficial for businesses, they also have a broader impact on the economy. When businesses are able to deduct these significant expenses, they have more funds available for other investments. This could mean hiring more staff, increasing wages, or investing in new products or services. In essence, these tax deductions can lead to a virtuous cycle of growth. Businesses invest in their growth, which can lead to job creation and increased spending, which then stimulates the economy. It's a win-win situation for businesses and the economy alike. In conclusion, these provisions in the bill are a significant boon for businesses. They encourage investment in research and development, which can lead to technological advancements and innovation. They also make it easier for businesses to invest in their own growth, which can have a positive impact on the economy as a whole. These changes are expected to aid businesses in their growth and expansion. The bill also contains some other noteworthy provisions. Let's dig a little deeper into these. One of these provisions is the expansion of the low-income housing tax credit. Now, this is a big deal. It means more financial support for those who are struggling with housing costs. This is a major step towards addressing the affordability crisis in housing. It's all about making sure that everyone, no matter their income level, has access to safe, affordable housing. And it doesn't stop there. The bill also extends tax breaks for victims of natural disasters. We all know how devastating these events can be. From hurricanes to wildfires, natural disasters can turn lives upside down in an instant. This provision is a lifeline. It's about giving people a helping hand when they need it the most. It aims to alleviate some of the financial burdens that come with rebuilding and recovering from these catastrophic events. But what's really remarkable about these provisions is how they reflect the broader objectives of this bill. They're not just standalone policies, they're part of a bigger picture. This bill is about more than just tax credits and deductions. It's about fairness. It's about support. It's about making sure that every family, every individual, has the tools they need to thrive. So, whether you're a parent trying to provide for your children, a business owner looking to invest in your future, or a victim of a natural disaster, this bill has something for you. It's about recognizing the different challenges people face and responding to them in a meaningful way. These additional provisions show the bill's focus on supporting those in need. In conclusion, this new tax bill brings several changes that could affect families and businesses alike. It presents a unique opportunity for millions of families, particularly those on the lower end of the income spectrum, to benefit from an expanded child tax credit. This phased increase, scheduled for the years 2023 through 2025, adjusts with inflation starting this year. In essence, it means low-income families who don't pay income taxes could receive up to $1,800 refunded of the $2,000 per child credit. With this proposal, about 15 million children from low-income families stand to benefit, and it could potentially lift 400,000 children out of poverty. It's a significant move toward equitable distribution and social upliftment. But the bill isn't just about families. It's also about supporting businesses. Provisions are made to deduct the cost of U.S.-based research and development investments immediately, restore full deductions for capital expenses, and expand the low-income housing tax credit. Additionally, tax breaks are extended to victims of natural disasters, offering them a much-needed respite. So, this bill is a comprehensive attempt to address multiple issues, from poverty alleviation to business support, all while ensuring the tax system remains fair and equitable. Stay informed about these changes, as they could significantly impact your family's finances in 2024 and beyond.